Welcome back to Money Media. James here, and today we are going to discuss the cash rate. Now, as you may be well aware, the Reserve Bank of Australia just cut the cash rate for the first time in far too long. It was sitting at 4.35% and they've dropped it 0.25 of a basis point, which means it's now at 4.1%. What does that mean for you? Well, if you've got a property, then you likely have a mortgage, and what that means is if you're on a variable rate, your repayments each month will come down slightly, so long as the bank that you have a mortgage through passes on that rate cut. Now, it's purely the bank's responsibility if they pass on the rate or not, but what you will find is if one bank lowers their rate, then the competing banks will feel obligated to lower their rates to stay competitive. Likewise, if you find that the main banks don't start lowering rates, then maybe all the banks competing may hold off as well. But I don't foresee that happening. In fact, even before this rate cut this time, we saw the major banks starting to cut their rates in anticipation. So there's two sides to the coin when it comes to cash rates, and I want to discuss that, and I want to discuss it really briefly, just so you understand. Like in anything with economics and finance, there's always two sides to the coin. So the positive may be that if you are a mortgagee, then your home loan repayments have likely dropped. That's a good thing. The other side to this is if you're looking to buy a property, then this reduction in cash rate will naturally push housing prices up. And the reason why it does that is because the market tends to price in the cost of money into the value of an asset. So when the cash rate is really low, then property prices are fairly high. And we saw that during COVID, didn't we? The cash rate was almost at zero. Borrowing money was almost free. And because of that, and a few other things in the mix, housing prices were really high and really hard to get because everybody had access to money. So of course, everybody wanted to buy a home or buy assets. So we saw assets across the board increase significantly. And we've seen during the period where the RBA has increased the cash rate little by little, but consistently over the last 3 to 4 years, we've seen housing prices very slowly come down. Now, they were very stubborn, obviously, and they were still continuing to go up as cash rate was going up. So because the cash rate has come back, we may actually start to see the prices of houses start to go back up again. There are of course many other metrics that are involved in this, and so time will tell in terms of the economy, but it's important to point out that the decrease in cash rate, it doesn't naturally mean a benefit for everybody within the market. But for those of you who have a mortgage and were hanging on to the cash rate reduction, congratulations, and I hope that adds a little bit more to your household income, and for your sake I hope we have a few more.